How's it going, guys? It's Damon here, and today I'm going to be talking about something that's really misunderstood, and that is income taxes, and why you shouldn't pass up on that raise because you think the taxes are going to eat up all your extra income because you're in the next tax bracket. So let's get into it. Now, before I start the video, go ahead and smash that like button, and if you're new to the channel, go ahead and hit subscribe and the bell notification icon so you can keep up on all of my content, which I post every single week, once a week. Now, let's get into it. Now, I've heard millions of times about people denying a raise because it's going to bump them into the next tax bracket, and they think that they'll be paying more in taxes, so they'll actually end up making less than they did before. Well, I can tell you this is completely false in about 99% of all cases. Let me explain why. The reason why is because the US tax code uses a progressive tax. And what that means is you only pay the amount of tax for each bracket for that certain amount. For example, the first tax bracket of 10% is your earnings from anywhere from $0 to $9,700. Now, if you make $20,000, you pay 10% on $0 to $9,700. You don't pay 12% on the whole $20,000. Now, to make this a little easier to understand, I'm going to break it down into an example. In this example, I'm going to use two different wages from two different tax brackets. To demonstrate this, I'm just going to, for simplicity, use the single tax rates for 2019, which are listed right here. Now, we're going to do a scenario where someone is making $75,000 and they're going to get a raise that bumps them up to about $85,000. So here is the example of what the taxes are like on $75,000. Let's go through the progressive tax rate through the whole income. As you can see here with the $75,000 income, I've given you the tax brackets and how it all works. So for the first $9,700, you're going to use 10% taxes. So you're going to times 10% by $9,700, that gives you $970 right here. And then for the 12% tax bracket, you're going to take your $39,475, which is the top of the bracket, and subtract the income that's already been taxed of $9,700, and then times that by 12%, which you get $3,573. And then you do the same thing for the 22% tax bracket, which caps out at $84,200. But since your income is within that tax bracket, you'll just use your income of $75,000, subtract it by the previous income bracket, and then multiply by 22%. That gives you a tax of $7,815. And that leaves you the grand total of $12,358 in income taxes. All right, now that we've gone through that example, let's go ahead and show you what the example for the $85,000 is. Now, it's going to work exactly the same way, except you're going to change a couple of things. So the $9,700, exactly the same. Second tax bracket, exactly the same. Since you're at the top of the tax bracket now, for the 22%, you're going to multiply, or you're going to use $84,200, subtract the previous tax income, and multiply by 22. That'll give you $9,839 of taxes. And then you're going to use your total income, $85,000, subtract the previous cap of $84,200, that's $800, and multiply by the tax rate of 24%, you get $192, which then brings you to $14,574 in taxes. Now, as you can see, this is obviously more taxes that you're paying. However, it does not mean that the taxes you are paying is more than what you're making. So let's compare the taxes just to show you. In the $75,000 income, you have $12,358 in taxes, which nets you to $62,642 of income after taxes. Now, for $85,000, you have $14,574 in taxes, which gives you a net income of $70,426. As you can see, bumping up to the next tax bracket did not do anything to hurt your bottom line. In fact, you're still making almost $8,000 more. Now, I know what you're thinking, $10,000 is quite a significant bonus, so of course the income is going to even out and be more. But let me just give you another example of a more realistic possibility. Let's say you're making $83,000 a year, which is right below the next tax bracket, and then $85,000 pushes you right over. Well, I did the math on that too, and that your taxes would be $14,118, making your net income $68,882. So even if you just got a $2,000 raise throughout the year, you would still be making pretty much that whole amount more than you were before. And that is why refusing a raise because of an increased tax bracket is the dumbest thing you can do. Now, there's a lot more things to be known about taxes, such as deductions and tax exemptions and a bunch of different things that you can learn. But however, that's all we're going to cover today, and I hope you learned a lot about how our progressive tax system works in the United States. If you have a friend that's worried about getting into a raise because it will raise them into the next tax bracket, maybe educate them about this topic next time, and it will probably change their mind. My name is Damon, and I'll see you in the next video. Cheers.